Hey everybody, what's going on? It is James here with Crypto Common Sense, and I have a Bitcoin/cryptocurrency market update video for December the 10th. Before I jump into the content for this video, please do me a huge favor, hit that thumbs up button, make sure to subscribe to the channel if you have not already, and make sure to check the description for a link where you can join Patreon for just $7 a month. Patreon members get additional updates, and they also get additional trade tutorials, including breakdowns of actual trades I've taken, the reasons why I took those trades, things I did right, and of course things I did wrong. So in this video, I want to talk a little bit more about Bitcoin. I decided to reactivate my Twitter account, mainly because there were some charts on there that I wanted to get access to, and then once I reactivated it, I was like, yeah, I'll hang around for a bit. And it took all of about 3 or 4 days before I started getting attacked verbally for my bearish views, so go figure. But that's okay. I've got the chart that I was looking for. It's this chart that I posted back on November the 18th, which was about 3 weeks ago. And this is a chart measuring Bitcoin versus the US 100. So in this chart, I hypothesized that we could actually be seeing a bubble play out instead of seeing it on US dollars, where price actually made a higher high in November. It could be that we were actually in a bubble versus the NASDAQ itself, where November was a lower high, as you can see here, and we were actually in the complacency phase. Now, this is the chart 3 weeks ago, and this is the chart today. So if we take a look here, this is actually versus the QQQ, same thing. I can put it on US 100 just for consistency, US 100. Okay, same chart. Again, when I posted this, we were up around 3.62. At this point, we've dropped down to about 2.92, and we did drop as low as 2.72. So this does look more and more like we're actually rolling over from the complacency phase, which is a real bummer. But I'm going to walk through a couple different scenarios in this video, so don't panic yet. Before I get to that, though, I've been pushing this idea really hard in my Facebook group, and I'm going to push it hard on this channel as well. Trading should not be complicated. Trading is difficult because it's an emotional battle, and most people have really poor self-discipline. I'm not making fun of people. This is just, it's why things are hard. We know what to do, but it's so difficult to make ourselves actually do it. Now, that being said, I can't help you with the mental part other than to say, well, actually, I can help you. Let me help real fast. The reason that people fail is because they fear what will happen if they're wrong. They fear that if they take a long, it might go down and they might lose money. They fear if they sell an asset, it might keep going up and they might miss out on money. Listen, at the end of the day, if you are using proper risk management, you have nothing to fear. You are going to lose some trades. You are going to lose some money. But as long as you have a trade system, and trading, again, is very simple. You don't need big fancy indicators. As long as you can draw lines on a chart and then build your mental discipline to follow those lines, you have everything you need to be a world-class trader. I saw this thing from Tony Robbins recently. I went back and started listening to old books that I had read, and I got into this Audible thing, which I really like, by the way. But one of these books was called Money Masters. And I tell you what, I hate that book so much. I hate it with a passion. I remember reading that book years ago and thinking it was a good book. But as I got back into it this time, they just made it sound like it was impossible to beat the market. They kept talking about these high-powered algorithms and how these companies have billions of dollars and they're building fiber optic lines so they can be faster than everybody else. And I thought, good Lord, if I hadn't already been trading for 4.5 years, this book would be enough to make me never want to try. Trading is not difficult, okay? So I'm going to draw some lines on this chart. I'm going to show you some very basic stuff that you can take and you can go forward and you can use in your trading. And then we're going to talk about the bigger picture stuff with Bitcoin and some of the different potential scenarios that I see playing out. So first off, this is a Bitcoin versus US 100 chart. The reason I like this chart better than a US dollar chart is because it gauges relative strength. So let's take a look at this. Let's take a look at this drop, this 2017, 2018, 2019, right? This area through here. Okay, so we draw a ray on there. We all know how rays work, or you should. It's just a trend line. It's a downward trend line. It acts as resistance. Obviously, when it came up here and hit it for a second time, that's when we got to draw this line. We didn't know where it would stop. just based off of a trend line the first time around. Okay, so there's our trend line. Now what we want to do is we want to be biased to the downside until it breaks this trend line. Unlike all the little Twitter gurus who were, oh, it's going to all-time highs back here. No, we had not broke our trend line, and we were leaving behind these giant supply wicks, right? Think about this. You have guys on Twitter who were telling you to get bullish on Bitcoin when there were giant supply wicks sitting there on a weekly chart. That's crazy, okay? But anyway, this goes over. Of course, we all know that I was looking for it to pull back to around that $4,000 level, which on this chart would be right here. That was the top of this ascending triangle back here. I was looking for the retest of that triangle and looking to fill in some of that liquidity gap that was left behind, okay? So we'll draw that over, we'll make it green because that is obviously support. Okay, so we're moving over. We haven't taken out our trend line. Boom, we hit support or demand. So this is a reason that we might have wanted to look for long positions down here, and we could put a stop loss down at the bottom of this tail, and hey, look what happened after that. Life was good, okay? But even if you missed this, if you were being more conservative, here we come back up to this trend line. We test it. Again, we expect this to act as resistance. It does, and it pulls back. This is May of 2020. Pulls back about, 30% or so. About 24%, okay? So we're still in bear mode here. But here it breaks out, and here's the magical retest. That's what you want to see. You want to see something break out of a downtrend and retest it. And if you can get a W, that's a strong buy signal. There's your W. It's not a double bottom. Double bottoms happen at the bottom of moves. It's just a W, okay? Because what was happening here was it was consolidating. It was gaining strength. Look at this. See that? You had this flat line of support, and what did you have on bottom? You had an ascending triangle, just like you had back here. Broke north of it. This was back in October of 2020. And boom. Off to the friggin' races. What happened here? Why did it pull back here right around $40,000 or so? Well, you tell me. That was the highest close in Bitcoin history. Now remember, if you're looking at a US dollar chart, this was dead air. This was open air. We didn't have a $40,000 resistance level, did we? Well, let's check. I mean, obviously everybody should know we didn't, but let's just take a look. There was nothing over here to act as resistance. How could we possibly predict that pullback? Because relative strength. So it pulls back from 40K down to around 30K, okay? Stops here and then powers back up. Well, when the price stops, what does it normally stop on? Support. Again, if you're looking at a US dollar chart, there was no support there. That was just open air. How the hell would you possibly know that it was going to stop there? Oh, well, look what we had over on the weekly chart on the relative strength side. There is a resistance level, which when broken turns into support. Ah, my goodness. See that? So you've now hit support, you've put some demand tails in, and up she goes. Wonderful, okay? Everybody loves this TA so far because this is all bullish TA. Everybody loves the bull side. Okay, continue pulling this over, and continue pulling this over, and look what we have. It even acted as demand through here. It just failed and had this false break south of it where it finally popped back up. Okay, I'll show you something about this in just a second. So here's our chart, okay? Now, let's put some Fibonacci levels in there from the top in 2017 to the bottom in 2018. Where did this stop at back in March? The 1.618. Now this is getting a little bit advanced, but essentially a lot of professional traders use Fibonacci extensions to try to predict where resistance levels will be when there is no resistance to the left. For example, at an all-time high like this. So this would be a major point of resistance for people that trade Fibonacci levels. And of course, profit taking ensued and boom, 50% rollover. Okay? Now watch. Okay? Looked like it might be breaking out here. Didn't do it. Fake out and back down. And of course, if we draw this like this, we get a trend line that looks like this. So I think either one of these is fine. Pick the one you like the most and go with it. Okay? There you go. Two big supply tails, wicks being left behind, and price rolls over. Now, this is all super clean on this chart. Much less clean when you look at the US dollar version. It's very confusing. It's like, what in the world? We're not putting in lower highs, we're putting in higher highs. How can we possibly roll over? Well, because when gauged versus the market, Bitcoin is weak. Doesn't matter what it looks like versus the US dollar, because people who are investing are looking for the strongest assets versus the market, not versus the dollar. So, yes, this rolled over here. And if you look at it over here, it's exactly what you would expect to happen. You would say, well, I'm making lower highs and I'm leaving behind supply wicks. Down she goes. All right? Now, let's put this on a monthly chart. Take everything off. Where did it stop at in the summer of 2021? This is a monthly chart, and this was monthly support. Cha-ching. Couple of demand tails left behind. Red candle followed by a roughly bullish engulfing candle. Didn't take out the wick, but did take out the body. There's your long signal. Go, go, go. Up, up, up. This is so clean and so simple. Trading is not complicated. Trading is difficult because it's very hard to say, gee golly, what if I sell at 69,000 and it goes to 250,000 like all these talking heads are telling me? Well, guys, let me just be the bearer of bad news. The talking heads don't give a shit about you. Most of them are probably taking short positions and liquidating their holdings while telling you to long Bitcoin. How can you get somebody to buy something when you're trying to sell it? Tell them it's going to keep going up. Very few people are going to be honest with you in this market because they all have their own motives. So this is a fairly long video because I wanted to get detailed with that, because that you need to understand all of that before you're going to understand the next part that I'm going to talk about. So in the video that I posted on December 1st, when Bitcoin was around $57,000, I called this drop. I talked specifically about how I felt like we were in wick-off distribution, and that I felt like we were probably around the midpoint of phase B, and that we needed to go down and quote-unquote test the summer lows. Now you can go find that video and verify that's what I said. Well, we did go down and we did test the summer range. We didn't get quite down to 30K or whatnot, but we did test the summer range. So I'm hoping that I am correct. I am hoping that is what is happening and that this is actually the midpoint of wick-off. Now that would look like this. We would be down around this level, testing the summer range, and we should, if that's what's happening, bounce back up. Even if this is distribution, both distribution schematics call for a move back up. Schematic number 2 calls for move back up to retest supply, which would be up around that $60,000 to $62,000 zone, somewhere in that ballpark. And schematic number 1 would say that we're going to have an upthrust after distribution, which would take out this high. Both of those scenarios are A-okay with me. I'm cool with that. What concerns me a little bit is the fact that I might be wrong about where we're at in distribution, and we might actually have already seen our upthrust. This might have been our upthrust back here, which doesn't match the schematic exactly, okay? And I'm going to show you another scenario why in just a second. But let's say hypothetically that this might have been the upthrust, this might have been the UTAD. Well, if that's the UTAD there, we got a problem, because this move down is actually this move down, where you get your weak little bounce to around 52K. Yeah, like the one we just had, right? And then you go down into the markdown phase, when phase D, where you first pause around these old lows and then you completely melt down. Okay, that concerns me because it's a very valid possibility. So I shared this possibility in my Discord and Patreon about a week back, 5 days back on December 5th. And this is another possibility that could be playing out. This is a much lesser known pattern. It's called the Three Peaks in a Domed House pattern. I first started talking about this about a little over 2 years ago. I thought that I saw it on Litecoin back then. I was wrong. It didn't happen. But that was when I first became exposed to this pattern. And if this is what's happening, then what we have here is our 3, 5, 7, and 9, which are 3 peaks. This is your bear trap down here between 10 and 14. You get consolidation between 15 and 20. You get your domed house, right? Your 21, your 23, your 25, and then down. Now, this is a problem because if this is what's happening, this leg down is actually 26. 27 is supposed to go back to the top of this move, which was around 52K. We just did that over the last couple of days. And then you get your markdown phase to the bottom of this zone back here. Again, down around 30K. Well, the reason that concerns me is because that matches up very closely with this schematic down here saying that we're, well, either one of these, saying that we're already in phase D. So that it concerns me. I'm not saying it's what's happening. I don't know. I don't have a crystal ball. But it does concern me a great deal, especially when I take into consideration that we're sitting here on a chart on the relative strength chart, right? Bitcoin versus the US 100. And we're looking like complacency. Ugh, right? Not what I want to see. Complacency doesn't get much of a bounce. It goes down, consolidates a bit, just like those schematics that I just showed you, and then it just completely melts down. Now that's compounded or made a little worse by the fact that, if you guys remember, I drew up a rising wedge on Bitcoin that I was watching for the last several weeks. And this was the rising wedge here. Now this is Bitcoin versus US dollars. It looked like that. Well, we broke out of that wedge to the south, came up, got a bearish retest, and we're starting to creep back down again. Now that wedge, some people say you can't measure wedges. Some people say you can. So whatever you believe is up to you. But if we measure it, it has a measured move down around $15,000 to $16,000 back down in this zone down here. I'm not saying it's what's happening. Again, I don't have a crystal ball. I'm saying these are scenarios. I don't personally see many scenarios that say this is a raging bull market and we're going to have, months and months and months of more upside. Best case scenario that I see is that we are indeed in a distribution that we possibly get, an upthrust after distribution. Hopefully up above this last high back here where I get to unload some of my spot that I want to unload. I won't sell everything, right? Because again, I think it's arrogant to think you know what's going to happen. None of us have crystal balls. Anybody that tells you they know what's going to happen, either they're delusional or they're trying to con you, okay? That's the only two answers to that. Nobody knows what's going to happen. All we can do is look at charts and use TA to the best of our ability to make predictions and then trade those predictions. But like I said, make sure that you understand the difference in measuring a chart versus US dollars and measuring a chart to find out relative strength of an asset, right? Relative strength will take you a long way. That's the US 100 or the QQQ. But remember, we also have that M1, measuring Bitcoin versus M1. We've got a triple top sitting right here. Okay, and again, I talked about this in the last video. It has not been able to take out this zone of supply. In reality, with measured versus money stock, Bitcoin is still sitting down more than 50% from its 2017 high. It has not taken out those levels. If you want to get bullish on Bitcoin, you want to see this close above this box. If it closes above that box, man, look out. All bets are off. But if it can't take out that box, you've just got a triple top. And I don't know anybody that's going to tell you to long a triple top. Hope you guys enjoyed this video. I hope you learned a lot from it. By the way, everything that I talked about in this video as far as relative strength and trend lines and simple levels of support and resistance, that applies to every single market on earth. That is not a crypto thing. You can trade stocks that way. You can trade Forex that way. You can trade cryptocurrency that way. You can trade precious metals that way. Those are all valid concepts in every single market. So, take it. Use it. Make life-changing money with it. I hope you do. I sincerely hope that you take what I just showed you in this video and use it to make gobs and gobs of money. Okay? And if you do, come leave me a comment and let me know. You won't owe me anything for it. I don't expect to be paid for it. I just like to know that I'm helping. So I hope you enjoyed the video. Make sure you hit a thumbs up if you haven't already. Make sure to subscribe. And like I said, make sure to join Patreon. Because again, it's $7 a freaking month. It's nothing, right? It's practically nothing. And I do more tutorial videos in there. I do more trade videos. I talk about trade lessons. I talk about trades I've taken. I break those trades down. And of course, I give more frequent updates on the markets themselves. This is James with Crypto Common Sense, reminding you that I am some guy sitting in a spare bedroom, which means that nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, or Forex. That's it. This is James with Crypto Common Sense, reminding you to please trade safe.